Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. BTFD on BTC. El Salvador and MicroStrategy stack sats despite the crypto market crash. Is this genius or insanity? Banks and Bitcoin. Some of Wall Street's biggest banks are on the brink of offering Bitcoin-backed loans. What could possibly go wrong? Institutional investment incoming. Solana, Polygon, Algorand, and Aave introduce various investment vehicles. When could their coins and tokens pump? Cryptocurrency exchanges expand. Crypto.com makes two key acquisitions while rumors circulate about FTX's record raise. What could this mean for CRO and FTT? Hacks expose the cracks. Bitmart and BadgerDAO lose millions as Celsius also takes a blow. How to protect your crypto. Crypto on the front cover. Forbes 30 Under 30 features 15 crypto personalities. Who are they and what do they do? Jack and the Bitcoin stock. After stepping down as the CEO of Twitter, Jack Dorsey doubles down on Bitcoin with a Square rebrand. Why this could be bad news for Twitter's crypto plans and policies. Crypto confessions. Officials in India, Indonesia, and the United States admit that crypto competes with the fiat financial system. Does this mean a crypto crackdown is coming? And a closer look at a potential reversal in this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Late last week, the crypto market crashed. Bitcoin dropped by 20% and most altcoins dropped by 30% or more. In the middle of all the madness, Salvadoran President Nayib Bukele announced on Twitter that his government had bought the dip yet again. This time around, it acquired 150 BTC, bringing El Salvador's total holdings to 1,270 BTC, which works out to around $60 million. The last time El Salvador bought the dip was just 10 days ago, and this is around the time MicroStrategy executed its own BTC purchase. At the end of November, MicroStrategy CEO Michael Saylor tweeted that the company had acquired an additional 7,000 BTC, bringing its total holdings to over 121,000 BTC, worth over $3 billion. The reason why these two entities have been buying BTC so aggressively is simple: inflation. Fiat currencies are losing value by the day, and in many countries this is happening at a record rate. As I mentioned in my video about Bitcoin adoption in Latin America, countries such as El Salvador, which have historically been dependent on the US dollar, feel the effects of inflation much more severely, as they rarely receive any of the freshly printed money. As for tech companies like MicroStrategy, many are sitting on millions of dollars of capital, which can't be allocated to anything that would provide a meaningful return on investment. And the longer they sit on it, the more it loses value. Though these big BTC purchases may sound preposterous to the average person, they're the correct play in the eyes of many experienced investors who see BTC as an inflation hedge. The insane demand for Bitcoin amongst experienced investors has essentially forced banks to provide crypto services of their own, and it looks like big banks in the US are about to introduce Bitcoin-backed loans. Citing, quote, 3 people familiar with the plans, CoinDesk noted in a recent article that Goldman Sachs is one of many big banks that's working on making it possible to borrow against BTC. In addition to physical BTC custodied by professional custodians such as Coinbase and Fidelity, these banks will also accept Bitcoin futures contracts as collateral, which is pretty crazy. Even though 2 small banks in the United States have supported BTC-backed loans since March this year, the same move by a big bank like Goldman Sachs could cause the entire banking sector to follow suit. US banks have been able to hold Bitcoin since last July, and the reason why they haven't been offering BTC-backed borrowing boils down to regulations about how much BTC reserves they must keep. As I mentioned in my video about cryptocurrency custody, the money you have in the bank technically doesn't belong to you, and the bank will almost always invest or lend out your cash elsewhere when it's deposited. This is called fractional reserve banking, and one of the big concerns about Bitcoin in this context is what happens in the event of a massive crypto crash, since banks must keep a minimum percentage of assets on their balance sheet relative to their liabilities. Funnily enough, the Federal Reserve removed all reserve requirements at the start of the pandemic, which basically means all the money in circulation could very well be backed by nothing at all. Now, this just comes to show you how broken the current financial system is and why you should never, ever give your BTC to a bank. You can learn more about how broken the fiat money system and banking really is by watching my video on the biggest Ponzi of all time. That's up there in the top right. Anyways, even with all these banking concerns, big investors are likely to custody their crypto at these kind of institutions. And it's not just BTC that they've been buying these days either. Due to popular demand, Grayscale has launched a Solana trust, which currently holds over $11 million in SOL. To put things into context, Grayscale's Solana trust had $10 million in it when I posted my Solana update video last week, and that's before SOL crashed by 30%. This suggests that the institutional demand for SOL is insanely high, and this seems to be the case for Polygon as well. This is because 21 shares listed 2 Polygon ETPs on European stock exchanges. Now, for the sake of simplicity, you can think of ETPs as being the same as ETFs. According to the head of institutional capital at Polygon, we can expect to see another half-dozen investment vehicles for Matic listed on exchanges around the world. One of these might be a Grayscale trust, given that Grayscale announced back in July that it was considering a Polygon trust along with Solana and 11 other cryptocurrencies. Another cryptocurrency that's been attracting institutional attention is Algorand. For starters, a former Citibank executive has launched a $1.5 billion crypto fund called Hivemind Capital Partnerships, which intends to spend much of that money on Algorand. Borderless Capital also announced a $500 million crypto fund, which will be spent entirely on the Algorand ecosystem. Aave has also been onboarding institutional investors like crazy, and a pending KYC solution for its Aave Arc platform could accelerate Aave's adoption. Now, although these cryptocurrencies are unlikely to pump when the crypto market is in a slump, the fundamentals are firmly in position to take Sol, Matic, ALGO, and even Aave to new all-time highs. All it takes is a bit of hype. Hype is something that Crypto.com has been causing a lot of these days, and its latest bullish announcement is the acquisition of 2 US exchanges for $216 million. The significance of these acquisitions really cannot be understated because they foreshadow the launch of a US-based Crypto.com exchange. When that news comes around, you can bet that CRO is going to pump even harder than it did when Crypto.com announced that $700 million naming deal for the Staples Center in Los Angeles. Another exchange that's been in the headlines is FTX, which is reportedly looking to raise $1.5 billion for its global and US operations. This will give FTX Global a valuation of over $32 billion and give FTX a valuation of $8 billion. Now, as some of you will know, FTX Global has an exchange token of its own called FTT. In my video about exchange tokens, I speculated that FTT would be the most successful exchange token after BNB, and it looks like this scenario is playing out. This is partially because FTX has been keen on compliance, something which was once again underscored with its recently released regulatory proposals. The thing is that FTT is too close to being a security, aka a stock in a company, to be listed on US exchanges, hence why FTT is not listed on FTX US. Oddly enough, it seems that CRO was able to skirt this regulation by being listed on Coinbase as an ERC20 token, and this will give it a huge advantage over other exchange tokens going forward. You can learn more about CRO and what Crypto.com has been up to by using the link up there in the top right. Now, as exciting as all these cryptocurrency exchange announcements are, it's important to remember that it's never safe to keep your coins or tokens on an exchange unless you're trading. The recent hack of the Bitmart exchange is a sobering reminder of this fact. Over $200 million of tokens on Ethereum and the Binance Smart Chain were taken. Now, for what it's worth, most of the cryptocurrencies stolen were shitcoins, which is why some are saying that nothing of value was really lost. Even so, this is no joke for the thousands of users who lost a lot of money, and if you happen to be one of those affected, I want you to know that money can always be made back, especially in crypto. I recommend using a reputable and regulated cryptocurrency exchange going forward, and you can get my top 5 using the link in the description. Anyhow, DeFi protocol Badger DAO was also hacked last week, leading to a loss of around $120 million in cryptocurrency. The hacker essentially compromised the main smart contract of the dApp, making it possible to pull funds out of just about any wallet that had interacted with Badger DAO. $90 million of the compromised cryptocurrency came from one user who reportedly lost 900 wrapped BTC, which is unfortunate in every sense of the word. It's possible that this BTC belonged to centralized crypto lending platform Celsius that CEO Alex Murzinski admitted in an AMA had been affected, though he declined to say how much it lost. The good news is that no customer funds were lost, but I wonder if the funds on Celsius are customer funds, since they technically belong to Celsius when they're on the platform. In any case, these hacks are not a good look for cryptocurrency, but luckily there are more positive things making the headlines in the mainstream news these days. The latest edition of Forbes 30 Under 30 featured 15 people from the crypto space. For those unfamiliar, the Forbes 30 Under 30 actually consists of 600 business leaders in various industries who are, of course, younger than 30. Among the 15 crypto personalities that made the list were Caroline Ellison and Sam Trabucco, the co-CEOs of Alameda Research, Alex Atala, the co-founder of OpenSea, Casey Caruso, a partner at Paradigm Capital, Brian Tubergen, co-founder of CoinList, Emily Yang, aka People Pleaser, founder of Pleaser DAO, Clinton Bembry, founder of Slingshot, Tegan Klein, co-founder of Edge and Nodia, and Ranil Rumberg, co-founder of Audius. What all of these individuals have in common is that they're entrepreneurs and founders of projects that have gone on to make millions and, in some cases, billions of dollars. If you're curious about who the richest people in cryptocurrency are, I have a video about that, which you can find in the top right. Anyhow, congratulations to all those just mentioned. I don't know what makes me more jealous, their incredible achievements or the fact that they're under 30. Speaking of rich people, Jack Dorsey suddenly stepped down as the CEO of Twitter last week because, quote, the company is ready to move on from its founders. A rather gnomic explanation, if you ask me. The real answer was revealed 2 days later, when Square rebranded to Block to reflect the company's shift in focus from finance to cryptocurrency. Now, this isn't actually what it said, but it's pretty obvious. This is because Jack is also the CEO of Block, and Block, happens to hold BTC on its balance sheet already. Block is also building a decentralized exchange for Bitcoin and recently released a white paper for it, which I'll leave in the description if you're interested. Now, if you watch my video about companies who hold Bitcoin on their balance sheets, you might recall that Jack told shareholders that the company must, quote, invest aggressively in Bitcoin back in July. Now, something tells me that Twitter's Bitcoin tipping feature might have been the extent of what Twitter shareholders were ready to allow, and rather than continue fighting with them, Jack switched his focus to a company which is better suited for Bitcoin. While this might be good news for crypto, it could be bad news for censorship on social media. For example, the first order of business of Twitter's new CEO, Parag Agrawal, was to introduce a policy which many believe will negatively impact independent journalism, notably in the context of covering protests. As reported by TechCrunch, Parag is currently in the process of restructuring the company and has apparently fired 2 executive position employees so far. The real question is whether Parag will cancel Twitter's current and future crypto features, which were supposed to be introduced by the recently announced Twitter crypto team. There is no way of knowing for sure, but one thing is certain. Twitter is one of the companies that is heavily influenced by ESG, and you can learn about what that means using one of the links in the description. Meanwhile, in India, officials have tacitly admitted that the pressure they're putting on the crypto sector is coming from fears that cryptocurrencies could compete with India's upcoming central bank digital currency. The good news is that coverage around India's anti-crypto bill, which I discussed in last week's crypto review, was completely overblown. Rather than ban cryptocurrencies completely, the Indian government will simply regulate the sector and ensure that cryptocurrencies do not become legal tender. The bad news is that this could entail a ban on self-custodied cryptocurrency wallets, since peer-to-peer payments would otherwise be possible. It's a similar story in Indonesia, where officials are being even more explicit about their plans of using their CBDC to combat cryptocurrency payments. This suggests Indonesia's 2017 ban on crypto payments isn't working, but it's questionable whether the Indonesian government will crack down too hard, given that it's planning on rolling out its own cryptocurrency exchange. Now, that's something you'd never see in the United States, because SEC Chairman Gary Gensler is suddenly aware of the fact that Bitcoin is trying to compete with the current financial system. Specifically, quote, "In 2008, Satoshi Nakamoto wrote this paper in part as a reaction, an off-the-grid type of approach. It's not surprising that there's some competition that you and I don't support, but that's trying to undermine that worldwide consensus." Now, this is some serious validation for cryptocurrency, and if you want to know what else Gary has been saying about cryptocurrency lately, you can watch my video about that using the link in the top right. Turning to the charts, we can see that BTC is sitting comfortably at a strong zone of price support after a nasty correction last week. It looks like we painted a double top pattern over the last few weeks, and this foreshadowed a crash down to 46K. The reason why we wicked below that was because of the billions of dollars in Bitcoin liquidations, which pulled prices down even further. As you can see, we are still above the 200-day moving average, which is a very important level of price support. With some luck, we'll hold this level before moving up, but we might still need to bounce off that 200 days at 46K to get that final confirmation. Something tells me that we will find out when all the crypto CEOs testify in front of Congress this Wednesday, so be on the lookout. This week's winners are Terra, Polygon, Stacks, Unis said Leo, and OKX's OKB token. Now, if you follow me on Instagram, you'll know that the incredible price action of Terra's Luna coin is being caused by three things: demand for the UST stablecoin to use in Terra's Anchor protocol, demand for the UST stablecoin as a hedge against centralized stablecoins, and the recent Terra upgrade, which sees a portion of all Luna that's burned to mint UST permanently destroyed instead of being sent to the community treasury, as was previously the case. These dynamics have sent Luna to the moon, and though it saw a small correction over the weekend, if Luna can crawl back to the $75 mark in the coming days, a $90 Luna will come soon. As for Polygon, Matic's pump appears to have been caused by a combination of Polygon's continued adoption and the countdown to the ZK Day event, which will feature Ethereum founder Vitalik Buterin. ZK Day will take place this Thursday, and the charts suggest this might be a sell the news event. Now, I'll be doing a long overdue update on Polygon later this week, so be sure to stay tuned for that. When it comes to what's keeping Stacks' STX up, the answer seems to be NFTs and a bit of shilling by Kraken's head of growth, Dan Held. In all seriousness, Stacks is an amazing project, and you can learn about it by checking out the link in the description. Unfortunately, the same can't be said for STX's price action, which looks a tad terrifying. Like BTC, STX is sitting on a comfortable zone of price support, and it looks like it will consolidate a bit longer before recovering. There's not much to be said about Unis said Leo, since it's Bitfinex's exchange token. More about Bitfinex in the description too. Lastly, we have OKX's OKB, which is yet another exchange token whose price action is ultimately dependent on the activities of its associated exchange. OKB has performed pretty well over the last year, but its performance pales in comparison with the likes of BNB and FTT. Not financial advice, but I would stick to regular cryptocurrencies. And that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you want more of me, head on over to Twitter, TikTok, and Instagram to get a sneak peek behind the scenes. If you join my Telegram channel, you'll get the daily crypto updates you crave, and signing up for my weekly newsletter is a great way to get the tools, tips, and tricks you need to get paid. And of course, you can support the channel by heading over to the Coin Bureau merch store and picking up a shirt or hoodie or both. Links to all these resources are in the description. Thank you so much for watching, and I'll see you all in next week's episode.